A very good evening to all of you. A very good evening to all of you. Welcome to today's direct taxation class. So I am your faculty CA Ridhima Bhatia, and I'll be a faculty for the coming up couple of classes. So just a 1 minute introduction. So I'm CA Ridhima Bhatia, and I'll be taking up today chapter 3 of your module 1, income which do not form part of the total income, which is commonly called as your exempt income. So the drill remains generally same with me. I encourage maximum participation from all of you so that all your questions can be taken at real time basis, and again would encourage each one of you to practice to read what we, not only me but whatever any other faculty teaches, so that it retains in your mind. Listening is one thing, and then self study is really important. Okay, so all your questions will be taken care of. Again, I'll encourage participation. If I ask something, I will request you to please be spontaneously replying on it. Okay, so with this, let's start our class today. Now, chapter 3, which is exempt income. Now, generally, student thinks that okay, this is an easy chapter. We know there's agricultural income and there's 10AA, and let's wrap it up. Yes, you can say there are certain important sections in this particular chapter, but when I say for a question as a whole, one adjustment from section 10 and you don't know may impact your full 16 mark question. So, and nowadays when we have case scenarios, MCQs, risking anything or leaving any topic is a risk. Okay, so now we'll proceed, but before we proceed, let's just understand one thing. Which I sometimes assume students use the word interchangeably, exemption and deduction. Okay, so if the handwriting is just not clear, you can clearly tell it. Okay, so the word exemption and deduction, exempt income or the income which is getting or deduction from a income. Now the point is, do you understand the difference in that? Yes, you know. Exemption is that the income will not be taxable at all. It will not be taxable. But on the other hand, when I talk about deduction, deduction means that my income is taxable, but on certain fulfillment of certain conditions or criteria, there may be some sort of relief or from the taxability. Correct? So exemption is that it is not getting taxable at all. By not getting taxable at all means that it will not be included in my gross total income. But deduction, on the other hand, it would be included in your income and it would be part of your gross total income, and then from gross total income you give the deductions. Majorly deductions are covered under chapter 6A, yes, which is from 80C to 80U. Exemptions are covered under section 10. Under section 10. So section 10 of the Income Tax Act actually has an heading, incomes which do not form part of the total income. Correct? Any doubt? Okay. Now this particular chapter 3, has various sections of section 10, but having said that, it still covers a limited number of sections, because the other sections, other clauses of your section 10 are covered in the respective chapters as and when the dealing comes, so that you can connect with the topic more in a much better way. Ma'am, what do you mean? See, like you have exemptions in relation to your salary income, your house rent allowance, all of these are covered in the salary chapter. So we'll not be discussing that today. Or your exemption in relation to non-resident. The non-resident exemptions are covered in the non-resident taxation chapter. Or your exemptions in relation to capital gain, section 1037, that are covered in your capital gain chapter. So the exemption which we'll be doing today would be the one which are not specific to some particular chapter, but in general as a whole. The other specific one, because there's a huge list of exemptions, are covered specifically, strategically in the chapters itself. Okay, so one more thing before I go ahead is I want you to understand this very basic thing. What do you call this? Section 10.3. What do you call this? Whether you call it section 10 clause 3 or whether you call it section 10 subsection 3. A very general trivia. Yes, so students, we call this as section 10 clause 3. Ma'am, how do we get to know that whether we have to call it section 10 clause 3 or section 10 subsection 3? See, it's very simple. Whenever you pick up a particular section, okay, there are various paragraphs, right? 1, 2, 3, 4. Now, if without reading 1 or 2, you can understand subsection, the para 3, which is basically subsection 3. Then you use the word clause. So meaning thereby, when in a particular section, you have different paragraphs and you don't have to refer to one another to have a clear understanding, then all these paragraphs are clauses. Because now when we'll be doing section 10, there are so many clauses, 1, 2, 3, 4, 23A, 23A, and 26A and all. So all of these are clauses. So please, in your future references, do not call them section 10 subsection 1. Okay? But when I say a particular section, say any of your favorite section, say section 35. Now section 35 may, to understand section 35(1) clause 2, I have to understand subsection 1, subsection 2, subsection 3 and 4. So these all paragraphs are my subsections. Okay. Similarly, section 2 has the clauses. Similarly, section 2 has clauses because these cover definitions which are not interrelated. So you call them section 2 clause 1 has so and so definition, section 2 clause 2 and so on. Okay? So please, a general thing to take care of in future. Okay, so now we begin with our para, okay? So first thing first is our section 10 clause 1, which is called agricultural income. Now agricultural income, students, is exempt from tax. Why it is exempt? Because constitution specifically says that central government cannot levy tax on agricultural income. So agricultural income by constitution comes as exempt and center has no authority to levy tax on it. So agricultural income, when I say, what do you understand by it? Agriculture, may we understand that there is some agriculture activity, okay, fine. Just planting is not agriculture. The planting which you do at your home, these are not agriculture. By agricultural income, we have to first understand what my section 10 subsection 1 says, and then we'll move slowly with all the examples covered. Now, agriculture is not defined anywhere particularly, but yes, agricultural income is defined in my section 2 clause 1A. So section 10 subsection 1 clearly says agricultural income is exempt. That's it. So to understand it better, we go to the definition section, which is my section 2. Section 2 clause 1A says that agricultural income covers 3 types of income. Agricultural income covers 3 types of income. What are these? Rent or revenue derived from agricultural land. Rent or revenue derived from agricultural land. Now you will ask, ma'am, what is rent? What is revenue? What is agricultural land we're talking about? Correct? We'll do that. Then it says income derived from such land as in agricultural land, by agriculture, processing of agriculture produce into saleable commodity, or sale of such agricultural produce in the market. Okay. And the third part says from agricultural income also includes income from farm building required for agricultural operations. Now these three categories of income, if they are falling, if your any agricultural related income is falling in these three categories, it would be agricultural income as per section 2 and it would be exempt as per section 10. Okay, I'm not leaving here, we'll do each one of it in detail. Now, number one is my rent or revenue derived from land. So land, it is clear that it should be a agricultural land, correct? But that land, say rent or revenue which you are getting, should be for the purpose of doing agriculture related purpose. Ma'am, what do you mean? Let me give an example. Okay, I am a owner of an agricultural land in Punjab. Okay, now there comes a production house to do a shooting for a month. They give me rent for that particular time and for that area they are using. Now that rent, even if it is coming from an agricultural land, is not my agricultural income. Why? Because the rent which is being received from the land is not for using it for the agriculture purpose. So where there is no agriculture purpose, there would be no agricultural income. And obviously the land which we are talking about should be the land which is situated in India. If I have a land in, say, New Zealand, beautiful green lush agricultural land, but any income from that, even if it is from agriculture activity, will be taxable in my hands provided I am a resident. Okay, now back to the first part, rent or revenue. Rent or revenue, when I say rent is basically what you get for giving someone the use of land, and revenues generally in different state terms, you can say different fees which the person using it pay to you. Okay. Now when I talk about rent, rent may or may not involve ownership. So you'll see, ma'am, what is that? See, I gave my land, agricultural land, for agriculture purpose to Mr. X. I gave my land to Mr. X. Now, Mr. X further give that land for agriculture purpose only to another person, another farmer, Mr. Tukaram. Okay. Now, he is receiving, Mr. X is receiving rent from Mr. Tukaram and I am receiving rent from Mr. X. So for both of us, that rent is the agricultural income. Even if Mr. X is not the owner, but that rent would be the agricultural income. Clear? So what did we learn? We understood that land should be in India. It should be for agriculture purpose and the rent should be received whether or not you are the owner. And second thing, students, whether or not it is received in cash. As in, it can be in kind, because generally when we talk in agricultural terms, many places you will see that rent is being paid as a part of produce, that whatever they grow, they give them as a rent. So in kind is also allowed. Okay. Next is my income derived from such land. This part of the definition. They are saying agricultural income would include income derived by agriculture. And by agriculture, again, I told you it is not, agriculture term is not defined. Agricultural income is defined. So agriculture, we mean obviously certain activities of tilling the soil, then harvest, then putting the grains, weeding and everything, and then keeping the full care. So all of this is called agriculture, correct? Processing of agriculture produce into saleable commodity. Any sort of processing which you do. Now, ma'am, what do you mean by processing? Now, when I talk about first thing through agriculture, agriculture always consists of certain basic operations. To understand that as in agriculture, certain basic operations so that you can differentiate that this is agriculture and this is a planting at home. So certain basic operations which are necessary to raise the produce. If you're conducting that and then from that you're having any income, that means you have an income from the land through agriculture. Clear? Also in conjunction to your basic operations, you may do certain subsequent operations. Basic operation is that you prepared the land for sowing, you sowed the seed, and now you're waiting. So that is your basic operations. The subsequent operation is like taking care, putting timely fertilizers. All of these are my subsequent operations. But subsequent operations should be the one which are just in continuation of the basic operation. Subsequent operation does not mean taking your agricultural activity to a whole new level and giving totally different nature or totally different type to the produce which was grown. When we talk about subsequent operations, we talk about something more than the basic operations and something which is required in continuation to the basic operations. Okay, number one. Number two, they say income derived from such land through process employed to render the produce fit to the market. You have done basic operations and subsequent operations. You're doing some basic processes. You're doing some basic processes like removing stones from the produce or putting them in gunning bags, packaging all of these are certain processes which you are employing to make it a sellable commodity. So if you are doing any agricultural income, if you are having any agricultural income through certain processes which is done or which is conducted to make the commodity sellable, then it is your agricultural income. But one thing you have to remember is that whatever produce has been come up, it should retain its raw nature. It should retain its raw nature. The mango should be sold as mango. It should not be sold as mango pulp. Or in the case of potatoes, potatoes should be sold as potatoes. Yes, you may keep it clean and do all that stuff, but potatoes should not be stored as chips. You cannot say that these chips are my agricultural income because we are talking and focusing on two things, basic, subsequent operations. Then we are saying certain processes to make it fit for a sellable commodity. We are not saying that agriculture, say you have produced tomatoes and now you're selling tomato ketchup and you're saying that this is my agricultural income. No. Sale of such agriculture produce. Now, after basic operations, subsequent operations, and after making it through certain processes, whatever you sell of that agriculture produce would be your agricultural income. Now, that agricultural income can be to the cultivator or can be to the receiver of rent in kind. Ma'am, what do you mean? One second. Let me tell you, see, this is the land, okay? Now produce happened, okay? Now this person who's the farmer, he gave all his produce as rent to the owner, who is Mr. X. Okay? Now for Mr. X, this rent which he has received in kind, is agricultural income, rent received from land, correct? This is my agricultural income. Now, Mr. X, what will he do of all this produce? He went to the market and sold all of these. Okay? So, whatever he's earning from the sale of such agriculture produce is also agricultural income of Mr. X. And that's why they write income from sale of produce either to the cultivator or to the receiver of rent in kind. Clear? But again and again and again, they are saying that only till the stage the produce is in its raw or its main form, till that time, whatever you're earning is your agricultural income. Beyond that time, if you're employing certain marketing operations, certain core processing operations and just changing altogether the nature of it, you cannot say the whole income from that is my agricultural income. Okay, so in that case, if you are deploying so many processes, how will you differentiate between your agricultural and business income? Very simple. do not read the rule, do not need to ratify, nothing to be ratified. Okay, this is simple. Let me give you an example of mango. Okay, so I'm into the cultivation of mango, growing the mangoes. Now mangoes were grown, okay, 50, not, let's say 50, 60. 60% of mangoes I sold after applying certain basic process to make it fit to sell it in the market, packing in the boxes and all that. Okay, 60% of the produced I sold it by deploying certain basic process. Okay, now this 60%, say whatever income I'm getting would be my income from agricultural, would be my agricultural income. Correct? Yes. Now on the remaining 40%, please listen. On the remaining 40%, what did I do? I deployed certain processes and made a mango pulp out of it. Okay. I made a mango pulp out of it. Now this mango pulp I'm selling to a juice company. And now I say, this is my agricultural income. Can I say this? No, this is not my agricultural income. Say by selling pulp, I get 4 lakh rupees. By selling pulp, I get 4 lakh rupees. I am saying this is my agricultural income. This is not my agricultural income. Why? Because till the time these were mango, from that sale, whatever I would have earned would be my agricultural income. But deploying it and changing the nature of the produce and changing it into the pulp and getting up something from that would not be my agricultural income fully. Some part of that would be my business income. What part would obviously my agricultural income, and other part would be business income. How? Simple. Till the stage, this mango, the 40% of these mango, what would have been fetched in the market as mango itself would be my agricultural income, and the remaining part would be my business income. Clear? So how will I determine? Everything would be given. Now you try understand with this rule 7. Income from growing or manufacturing of any product, application of more than ordinary process on the produce, then what will happen? There would be two income. Two income was this 40%. 60% is my agricultural income. But out of this 40% also I will have two income, agricultural income and business income. Agricultural income will be till the stage it was mango. You will take the market value, and market value of that mango would be your agricultural income. After that, suppose market value of these 40% mangoes were 3 lakh. So 3 lakh would be my agricultural income. Now of the remaining 1 lakh would be my business income net of expenses. Net of expenses on what? Expenses on these pulping procedure. Simple. So now agricultural income would be market value minus cost of cultivation. Business income would be sales minus the agricultural income of the mango minus my manufacturing expenses. Determination of market value, how will you determine? Simply, first it would be given in question. If not, if it is given in question, average price you can take, or you can do the cost plus profit method. Simple. Okay? Expenses of cultivation plus rent plus any amount which AO finds that this is your, this will determine your market value. Now, based on this, I would request you to do this small question which is on your screen and tell me what is the agricultural income and what is the business income. Please be careful. Here, I'll read the question for everyone. Mr. B grows sugarcane and uses the same for the purpose of manufacturing sugar in his factory. 30% of the sugarcane produced is sold for 10 lakhs, and the cost of cultivation of such sugarcane is rupees 5 lakhs. The cost of cultivation of the balance sugarcane, 70%, is 14 lakhs, and the market value of the same is 22 lakhs. Okay, but for the balance sugarcane of 70%, what he did, after incurring 1.5 lakhs in the manufacturing process on the balance sugarcane, from the sugarcane he sold sugar. He sold sugar was sold for 25 lakhs. Compute B's business income and agricultural income. Quickly, the question is on screen. Please do this. 30% वाला तो full agriculture, 70% वाले में tiller stage agriculture, and after that stage business. I'll talk to the tech team for the video stucking. Otherwise, if you have any other query, please. And I request everyone to please answer this. Quick, guys. Okay, those who have solved, the agricultural income is 13 lakhs and my business income is 1,50,000. How? Come in. See, simply for the first 30%, let me do 30%. The first 30%, guys, 10 lakh. It was sold for 10 lakh. Correct? Net of expenses, display expenses were my 5 lakhs cost of cultivation, right? So 5 lakh is my agricultural income of this 30%. Any doubt? Okay. Now for the remaining 70%. Up to the stage, it can be sold as sugarcane. What value it was fetching? It was fetching 14 lakhs. Sorry, it was fetching 22 lakhs at the cost of cultivation of 14 lakhs, correct? So this 22 minus 14 would clearly students. Now I have written to the tech team also. Meanwhile, I've restarted my connection also. Please, if it is still buffering, please put it in the query section. We'll just look into it. Okay. Shall we proceed? So I hope the answer for the slide is clear. Next, we proceed to the next part. One, so it is clear you have to differentiate between a business and agricultural income. Again, do not go through how do not ratify rule 7. It is very simple. Up till a stage, agricultural income. Beyond that stage, whatever additional you are getting, that would be your business income. Additional income net of additional revenue net of additional expenses. Now, students, there are certain types of activities which by default will have additional processing in addition to your basic and subsequent operations, correct? In addition to your basic and subsequent operations, there are certain types of agricultural activities which will always have agricultural and business component both. And these are certainly your three main: tea, coffee, and rubber. Tea, coffee, and rubber. Now, income from growing and manufacturing of rubber, latex is produced and then it is taken up to the factories to make it a proper form of rubber. So, in that case, you don't have to go through all this process. You just have to remember agricultural land, and it should be a land which is assessed for some revenue by the government, So the land should be assessed to the land revenue in India, and if it is not assessed to the land revenue in India, and it is not assessed for the land revenue in India, then at least that land should be not in a cantonment area having a population of not less than 10,000, and should not be within 2 kilometers of a cantonment area, should not be within 2 kilometers of the cantonment area. First, this is my cantonment area, number one. Okay. Isme any land, if any land is there, which has a population of not less than 10,000, would be not considered. Then any land within 2 kilometers, of this cantonment area, if the population of this cantonment area is more than 10,000, but up to 1 lakh, then any land up to this 2 kilometer will also not be fit for exemption under section 10. But if this cantonment population is more than 1 lakh, but is up to 10 lakh, is more than 1 lakh, but is up to 10 lakh, then any land which is in 6 kilometer would also not qualify for my exemption. But if this cantonment population is more than 10 lakh, then any land within 8 kilometer from this cantonment will also not qualify for the exemption. Clear? Basis this, you can read it, and any questions you can ask. Because now I will ask some few questions basis your understanding, that what you have understand with up till now from agricultural income. Again, when we have a strict definition, it is always said to please restrict yourself to that definition. That means agricultural land used for agriculture purpose, income from produce, which is through basic and certain operations and basic sellable operations, and any income from farm building. Anything except in addition to that would not be my agricultural income. Okay, now that we have understood what is agricultural income, at your level, a case scenario, a case study, or a general farming and fishing, because there is no land, there is no agriculture operations conducted. That's why it's not an agricultural income. Another example is a question comes is of your I live in a beautiful vicinity to a forest. Okay, in a forest, may the tree grows. Okay, the tree grows. I go, I do the labor, cut the trees, and then I sell that into a timber, and then I receive the money. Now, the money which I'm getting it from the sale of timber, whether it could be my agricultural income. No. Why, ma'am? You will say, okay, you have just conducted the basic operation of cutting it and making it a saleable commodity for selling it. So, and it has grown from the soil and all that stuff. No. Spontaneous grown trees. What are spontaneous grown trees? Which grow on their own without any labor are, and the any income from the sale of spontaneous grown trees will not qualify as my agricultural income. Will not qualify as my agricultural income. Reason: there is no agriculture operation conducted. The land is not mine. There is no agriculture operation conducted, so hence it cannot be my agricultural income. Focus on the three parts of the definition and you will definitely get your answer. Basis this, let's see some example. But yes, after lots of deliberations and contradictory judgment by various courts, one thing is inserted clearly in an explanation that, listen please, income from sale of plants which are grown in nursery is my agricultural income. Is my agricultural income. Now you will say that, ma'am, the plants are being sold from nursery, but here also after lots of deliberation, it has been decided that at least the basic sapling grow on a land, and then it is converted into small pots and then kept in that greenhouse or green sheet room. So they are said to be my undisputed my agricultural income. Okay, so please be very careful. So some examples on the discussion. Income from flowers is my agricultural income, but income from poultry farming, income from dairy farming, butter making, all of these are not my agricultural income. Income from saplings, seedlings grown in nursery, which we have discussed as per explanation 3, is my agricultural income. Rent received from land is my agricultural income. But on the other hand, sale of spontaneous grown trees are not my agricultural income. Dividend paid by company engaged in agriculture operations is not my agricultural income. Any doubts up till now, students? I'm so sorry. Yeah, why? I don't know why this video is getting paused. Try reconnecting it. I'm also trying reconnected it so that it comes at a general level, as in a normal buffering level. Yes, Jay sir. Acha, okay. Okay, okay. 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 So everyone, before we resume and before your experience of class gets ruined, if there's any buffering issue still, please send it us in the query section, or if it is not also, please give us a confirmation. Aggregated to the non-agricultural income, and then the tax is calculated as time right now, or is it paused? I hope now there should not be any problem. Okay, coming back to the topic again, I was talking about taxation of agricultural income. When I say taxation of agricultural income is exempt, so what do you mean by taxing it? So by understanding, this is the concept called partial integration. We will aggregate the agricultural income along with my non-agricultural income, any non-agricultural income, be it business income, be it salary, anything, okay? Then I will calculate the tax on this total income. Ma'am, you're saying you're taxing it. No, I'm not taxing it. Then what will I do? I will reduce the tax on agricultural income plus my basic exemption limit. Okay, whatever tax come, this would be my final tax. Okay, now if I have to explain to you, I will say only taxing you for the non-agricultural income, but this is not the case. We'll do one question and you will see how the whole scenario changes. But again, I said that this is only applicable for those on which slab rate applies, individual, HUF, AOP, BO, and artificial juridical person. So for companies or for firms, please do not apply the concept of partial integration. Second, this will be applicable only when your agricultural income exceeds rupees 5,000 and your non-agricultural income exceeds the maximum amount not chargeable to tax. What is maximum amount not chargeable to tax? For resident very senior citizen, it is 5 lakhs. For resident senior citizen, it is 3 lakhs. And for all these others, it is 2.5 lakh. Let us take this example. On your screen, you have an example of, please everyone on the screen. Okay, so we have an example of Mr. X, a resident, who has provided you the particulars for the previous year 2021. The particular says income from salary 2,80,000, income from house property 2,50,000, agricultural income from land in Jaipur 4,80,000, expenses incurred for earning agricultural income 170. Compute the liability assuming his age is 45 years. I will do for 45 years and you will solve for 70 years and we'll share the answer. Okay, first please try understand for 45 years. So his conditions are his non-agricultural income should be more than basic exemption limit, which is having in this case, because salary 280, house property 250, and his agricultural income is obviously more than 5,000. So total income is my salary 280, house property 250, agricultural income is 3,10,000 because 480 ka income, 170 ka expenses. Okay. Clear? So my non-agricultural income is 530. Now, how to compute the tax? I told you, compute it as the aggregate of agricultural income and non-agricultural income. Aggregate of agricultural and non-agricultural income comes to 8,40,000. Correct? On this 840, if I calculate the tax, 5% of 2,50,000 plus 20%, because this person is of 45 years age, of 3,40,000. Step, then you will add surcharge and cess as applicable. Okay, so 80,500. This is my first step of aggregating agricultural income and non-agricultural income. Clear? Then I told you to calculate tax on agricultural income, but adding the basic exemption limit. Why are we adding basic exemption limit? Because I'll tell you, on this 3,10,000 plus 2,50,000, 560 pay, I calculate my tax. Why are we adding basic exemption limit? Because if I ask you to calculate tax as per 3,10,000 only, what you will do, 3,10,000 mein again you will do basic exemption limit of 2,50,000, which is not to be given because already in step 1 you have taken the basic exemption limit benefit. That's why you're increasing your income by basic exemption limit. So on this 5,60,000, I calculate my tax. It comes to 24,500. Any doubt? Now I told you I am removing my agricultural income ka tax from my total income ka tax. Minus 80,500 minus 24,500. Net comes to 56,000, right? And this 56,000 is my final tax, and I will apply surcharge here, and then my in total tax comes to 58,240. Correct? Yes, please give an exemption that no 115 BAC is taken up. 58,240 is my tax. Now, if I have to tell someone who is a layman, I'll say, sir, आपका तो agricultural income पे tax is not applied because we added agricultural income and then we removed the tax on agricultural income. But students, practically, the tax in a way has been taken on an agricultural income, or you can say your slab rates get diluted. Say how? Had this been your only income of 5,30,000, which is a non-agricultural income, you would have paid tax of how much? Correct. But now on this, you are paying 58,240 or say 56,000. So it is definitely getting much higher than what you would have paid only on your non-agricultural income. Correct. So that's why this concept has come into picture, so that you add your income and you pay tax on your total income, but getting a benefit of some part of your agricultural income. So this is the concept of your partial integration. Now I may request everyone to please yes, Padmanabhan, agricultural income concept is applicable to any category of person on who you apply the slab rate, individual, HUF, AOP, BOIs, artificial juridical persons. So please now can you all confirm me the answer of the same question by solving it for 70 years of age? Same question for 70 years of age, please. Quickly. Come on, guys, quick, quick. Very good. I got one answer, and Sumit is absolutely correct. The correct answer is 47,840. Your tax on agricultural income plus non-agricultural income would come to 78. thousand, and then it would come to the agricultural income tax would come to 32,000. Please do not forget of adding your basic exemption limit of 3 lakhs here. Very good, Sandeep. Good. Yes, agricultural income tax. You will say, ma'am, income is high and there is surcharge, and then there is no surcharge on agricultural income. Then the answer may differ. Okay. More than welcome to ask in even in the next class, give after understanding in next 1 to 2 hours. Okay. And things, different types of income, you will see that our slide at I can give the PPT to you and you can just read it, but I will not do that because this is not the approval. But again, end of begin with Section 10, Clause 2, amount received by member from the income of HUF. HUF is a different out of the income, the impartable state. That income, profit income which the partner gets from the partnership firm is covered as exempt income in my Section 10, Clause 2A. Clause 2A. So students, one thing before I go ahead, let me ask one small question of agricultural income. I did not see anyone asking. Think and tell, okay? Participation is important. Think and tell. Income is exempt if it is income is exempt if it is income from sale of agricultural land will qualify as my agricultural income to be exempt under Section 10. And under Section 10, Clause 1. Think. No, sale definition, not agricultural operations. It is not from this rent or revenue given of an agricultural land for agriculture purpose and not a farm building, obviously. So sale of agricultural land will not be covered as an agricultural income. Yes, having said that, to Bhopal gas victims, Bhopal gas will be counter disaster, any disaster. Now, exempt disaster related compensation that could not be covered as correct, be not taxable. Next is your Sukanya Samriddhi account. The Sukanya Samriddhi account made obviously contribution डालने पे you get Section 80C का deduction, but any income which you are getting from that account, ma'am, what do you mean by income? Interest income. So that interest income would be exempt. Think yourself as a person who is getting that income to understand all these exemptions. Okay. Next is educational scholarships, irrespective of the amount or source of scholarships. Section 10, Clause 16. Whatever scholarship amount you get, it should be for education purpose. It would be exempt. It would be exempt. MPs and MLAs, and here we're talking about before salary is my salary income, or this is my other sources income. Payment, salary given to MPs and MLAs, member of parliaments and member of legislative assemblies, the salary they receive, is it my salary income or is it my other sources income? So I'm a member of parliament and I'm receiving salary. Is it my salary income or is it my other sources income? It is my other sources income. It is not my salary income. Why? Because MPs and MLAs do not have an employer-employee relationship with the government. Yes, if you are deployed in any ministry, say Ministry of Home Affairs, Ministry of External Affairs, and then you're getting paid, that is your salary. But for MPs and MLAs, always salary goes into other sources. Okay. Now coming to the constituency allowances and your daily allowances. So any daily allowances or constituency allowances which they are being paid, because they are being paid on the allowances for their daily needs, and constituency is basis the constituency they are placed into. Okay, so whatever they get as allowances would be exempt. I'm again saying only these two allowances, but salary is taxable in other sources. Good, Sandeep. Good, Anjali. Yes. Because I've seen people taxing salary as your salary income. Next is my Section 10, Clause 17A, award for literary, scientific, and artistic works and other awards by the government. Now, very common, let's see, national awards. Have you heard of national awards? These are the awards which is facilitated by the government. Not the Filmfare Awards I'm talking about, the national awards. So the award money which you receive, that is exempt under Section 1017A. Again, these awards which are we are talking about should be by the government, not by some private company. So any award which is facilitated by central state government, that would be covered here. Next is my Section 10 Clause 18. Again, I think buffering problem is there. What is the problem today? Still the problem is coming. The whole momentum gets, sorry guys. Okay, back again. I hope now it should not make an error. Every end check has been done. Speed test is also done. I don't know why this problem is coming. Luckily, first class, it's okay. So now I hope the flow does not get interrupted. Quickly, we'll take up the sections. Okay, and just in case it comes, you are more than welcome to share any issue, whether it's buffering, whether it's technical, any questions. Okay, so now let's begin again. Okay, so I was telling you about the national awards, any amount which you receive in some artistic related or scientific related or literary related, any which is facilitated by the government would be exempt. Second thing, on the gallantry awards. Gallantry awards are like your Paramveer Chakra, Mahavir Chakra, Veer Chakra. So if you are a recipient of the gallantry award, then the pension which is received is exempt. What did I say? If you are a recipient of a gallantry award, then the pension which is received is exempt. The pension would not be taxable. But unfortunately, if you're matric, that means your family is getting the pension after the death of such individual, then the pension would be not taxable in the hands of the family. So we are talking about the pension received by the recipient of the gallantry awards, like your awardee, or so the pension may be either be received by the awardee itself or by the on the death of the awardee by its family. In both the cases, it would be not taxable. Next, we move to clause 19A, section 10, annual value of palaces of former rulers. Now, rulers have palaces. You go to Madhya Pradesh, you go to Rajasthan, they still have in their, as in residence, in their residence, they still have these places as occupied as their residences, these palaces, right? So now, whenever you have such palaces, you have to give their annual value, correct? Remember in house property. So only one such palace annual value would be exempt. So if you have 3 palaces, one of them annual value would be exempt. Clear? Again, students, I'm again sorry for the experience of buffering which happened today. But I hope the connectivity on the technical front is not getting disrupted. If again any section is required to be revisited, please drop it in the query section. Okay, next is my income from local authorities. This is very, very, very important. Income from local authorities, why I'm saying is very important, because this is the only place where this is discussed. And then out of so many categories of person, we focus on individual, we focus on firms, we focus on companies, but local authorities we do not focus upon at all. So please listen here how their assessment happens. Now, income of local authorities is exempt under section 10 clause 20. Who are my local authorities? Panchayats, municipality boards, municipal cantonments, and all of these are my local authorities. So their income is exempt. Their income is exempt. But what income is exempt? Very simple. So this is a local authority. Okay. Local authority will have income from what type of aids? Obviously, salary. You are consider yourself as a local authority. You will not have an income from salary. You will have an income from house property, that is exempt. Then your income from other sources is also exempt. Your income from other sources is exempt. Your income from house property is exempt. Then your income of capital gain is also exempt. Your income of capital gain is also exempt. You are a local authority. Your house property income is exempt. Your other sources income is exempt. Your capital gain income is exempt. Now, kaun sa head bacha? We are left with business income. Now, business income of local authority would be by what? By supplying of services, by supplying of commodity and services. So any income which they get from supply of commodity or services within their jurisdiction. Any income which they get from supply of any commodity or any service within their jurisdiction, that is also exempt. And if it is outside their jurisdiction, this is their jurisdiction, if they're supplying anything here, any income which they get by supplying water or electricity, outside their jurisdiction will also be exempt. So can I say that there is only one category of income would be taxable is, if I can say, is any business income which they get from supply of any commodity or service outside their jurisdiction other than water and electricity. Correct? Other than water and electricity. Clear? So this is what my section 10 clause 20 says. Moving ahead. Now we move ahead to section 10 clause 21. Now section 10 clause 21 says income of research associations. Now anyone remember a section which is section 35(1)? Now, Ismena, there are certain research association, you will understand it in the PGBP section, where you put scientific research for contribution and you used to get 100 and 150% deductions, right? So we're talking about them. Please listen. Again, I'm telling you, to understand these exemptions, it is important that you consider yourself as that person who's receiving that particular income. Okay? So now I'm telling you, I am running a business. I give a contribution to this scientific research association, okay, which is registered under section 35 subsection 1. Now, when I make a contribution, I will get a deduction under my PGBP income under section 35(1), say 2 or 3, okay? Correct? Yes. Now, I am making a contribution to this association. For that association, this is the income. For that association, it is the income, yes or no? Yes. So for this association, the contribution which they are receiving would be exempt under section 1021. Let me just make it bold clear. So for them, it would be exempt under section 1021. The business, any person who is making a contribution will get the deduction, and for them who is getting this as an income would be exempt under section 10 clause 21. Any doubts? Obviously, because you have to take care of certain conditions, is that these research associations should use the money only for the object which they have received. I am a research association. I cannot spend it on something which is not related to my existence, which is why I'm getting registered. I'm getting registered as a research association. So I have to use that money for that. If I use that money for some other purpose, it would be taxable. If I invest it in some income generating source, or if I invested in stock market, that they will withdraw my approval of a research association, they will withdraw my status of a research association, and all my income would become taxable. All this which you are seeing on this slide is what I have discussed. Okay? Now you can connect, I hope so. Two more we'll do and then we'll take a break. Okay? Incomes of news agencies. News agencies are not the one which you're talking about, the commercial news channels. These are the very raw government news agencies like your PTI. Have you seen on government related news which is directly broadcasted by them or telecasted by them is PTI or ANI is written. Press Trust of India or UNI is also written. United News Agencies. Have you seen that? So we are talking about those news agencies. So the news agency whose income, which is first of all solely set up for the collection and distribution of the news, as specified by the central income, by the central government, their income would be exempt, but only for 3 assessment years. Only for 3 assessment years, and provided they do not distribute the income to its member. Next is your income from professional associations. Now, these professional associations again has to be notified by the central government. Central government will release a notification by special order in an official gazette, and they will write that so and so professional association has received this exemption under section 10 clause 23A for so and so time. So professional associations are what professional associations? Which are set up in India for encouragement, control, supervision of the professional bodies, respective professional bodies like profession of law, profession of medicine, accountancy, engineering, architecture, etc., etc. Okay, and they are set up only for that. They are doing the work only for that, only for what they are being set up. They are approved by the central government, and for that much time, their income would be exempt. Again, basis the condition for which you have been given the approval. If you do not satisfy those conditions, or you later just do not adhere to the condition basis which the exemption is given, it may be withdrawn after giving the reasonable opportunity of being heard. Okay, so students, with this we'll take a small break of 5 to 10 minutes. I request all of you to please freshen up, and again, any of your queries, any of your doubts, you can please leave it in your comment sections. Thank you. So let's meet after around 7:40. Thank you. Jay sir? Jay sir? Welcome back from the break. I hope we are set from the buffering issues, and I hope you have no queries because now we'll move to certain sections of exemptions, and then we'll move in next 20 minutes to section 10 double A, which I know you all may be waiting for. Welcome back from the break. Okay, so now next, again, exempt incomes are certain very simple. I'll give you an examples of institutions which are section 10 clause 23 AA is next such exemption. Now these students, now these exemptions which are coming up ahead, very simple on the same lines. These are the ones which are set up for the welfare of a particular group, a society, or a particular employees. All of these funds get exemptions, or any authority which is being, any board which is being set up, or any committee which is being set up, and they are receiving the income. All of them, the contributions which they receive are their income. All of them get exempt. Okay, so section 10 clause 23 AA covers income from institutions established by armed forces. Armed forces are like the funds which are set up by like your regimental fund or non-public fund, which are solely for the welfare of the past and the present members of such forces or their dependents. So they get contributed under clause 23 AA. Similarly, if you have established any fund for the employees, for the welfare of the employees, so that fund is now a taxable entity. Whatever contribution which they receive would be exempt, provided the income is being used for the purpose, for the benefit of the employees or their dependents. Again, to get yourself get your income exempt under section 1023 AAA, you have to have the approval of the principal commissioner showing that this fund is set up for so-and-so welfare of so-and-so employees. These are the trustees, these are the objections. As a fund you're getting, it should be taxable under as a trust or something. Okay? Now LICs or any other insurance company which set up pension funds, so that pension fund, now LIC has a pension fund. Okay, I'm not talking about the income of LIC. I'm saying this is a pension fund which is set up by LIC. Now this fund will obviously receive contribution, and later on this fund will give everyone the pension as per the time. Correct? Now the contribution this fund is receiving is exempt under section 10 clause 23 AAB. Clear? Next, again, I'm moving towards welfare of a certain section, which is for khadis and village industry, would be coming from the contributions, right? But their purpose should be for the promotion or for the production of the sale or marketing of the khadi or the products of village industries. If they do so and apply the total income for the development of the khadi or the village industries, then only their income would be exempt under section 1023B. But the income is specifically exempt up to 1 to maximum to 3 years. Not that always your income would be exempt, but maximum to 3 years. And if the exemption is given on certain conditions, and if you do not follow them, it would be withdrawn, giving you opportunity of being heard. Then 10 clause 23 BB, which is for your, again, any authority which is set up by the state provisional act for promotion of khadi and village industry. The above one, the 23B1, is to be set up by khadi and village industry commission. This, any state if set up, their income would be exempt. I'll be a bit fast over it because these are general welfare sections which you should have an idea of. Next is section 10 clause 23 BBA, income of authorities for administration of religious and public charitable trust. So obviously if there are any there's a general Gurdwara committee of every Gurdwara in Delhi. So that would be an authority which is there for the administration, but not a particular Gurdwara trust which is covered here. That may be covered under a different charitable trust option or a religious trust option. But we are talking about the authorities which administer the religious trust. Their incomes are exempt under section 1023 BBA. 1023 BBE, IRDA, you have heard, Insurance Regulatory and Development Authority of India. So all of these bodies generally have their income exempt in some of the particular sections. So section 10 clause 23 BBE says IRDA ka income, whatever income they're having, IRDA ka all income is exempt. Similarly, CERC, Central Electricity Regulatory Commission, their income is also exempt under section 10 clause 23 BBG. Income of Parasar Bharati. Parasar Bharati is our government का broadcasting channel, Broadcasting Corporation of India के through Parasar Bharati came. So Parasar Bharati का any income is exempt under 23 BBH. Now please here come your attention again back to 1023C. The one which are very important, I'll try regaining your attention there. Clause 23C of section 10. Now this section has clauses. This section has, this is a very important section, number 1, has various subclauses 1, 2, 3, 2, 2, 3, as you can see here, and goes till 6A. So what I have done is in these 3 slides, I have made a pool for you people to remember this particular section 10 clause 23C. This will again come up when you will do the charitable trust chapter, which will tell you why their income is exempt, on what basis the income would be exempt, how is the approval process and all that stuff. Okay, here we are understanding what type of entities are covered here whose income would be exempt. Everyone's favorite fund is here now by the amendment. Okay, so now clause 1023C 1, 2, 3 covers all my national funds. See, we are not talking about the donation which you give, the donation which you will be giving. You are the person who is donating. I am that fund. For you giving me the donations might be covered under ATG. But me as a fund, if receiving that donations, what would happen? That is what is covered under section 10. And I'm again saying that so that you can relate it. Okay, so you make a contribution to Prime Minister National Relief Fund or PMKS fund. For that, you get a deduction under ATG, 100% deduction. But here, I will get my income as a fund would be exempt under section 10 clause 23C subclause 1. Okay? So any income of certain national funds like Prime Minister National Relief Fund, PMKS fund is included. Anyone knows PMKS fund ka full form? Yes, KS has, PM is Prime Minister, but KS also have a full form. Anyone has an idea? It is Citizen Assistance and Relief in Emergency Situation Fund. So this case has an idea, has a full form, just a general trivia. Okay, so Prime Minister National Relief Fund, PMKS fund, their incomes are exempt. Prime Minister's Fund for Promotion of Folk Art is exempt. Prime Minister Aids to Student Fund is exempt. All their incomes are exempt under section 1023C 1, subclause 1, 2, and 3. Okay, then we have your 1023C clause 3A, National Foundation of Communal Harmony. Again, their income is exempt. Swachh Bharat Kosh, whatever Swachh Bharat Kosh means that says amount goes, that is exempt under subclause 3A. Under subclause 3AA, sorry. Then under subclause 3AAA, which is the AAA, Clear Ganga Fund is also exempt. You get an ATG ka 100% donation. Here it is exempt. And then Chief Minister Relief Fund, Lieutenant Governor's Relief Fund, all such their incomes are exempt under subclause 3, not AAA, quadrate A. Okay. Now, again, some educational institutions incomes are also exempt under section 1023C. Then some hospital incomes are also exempt under section 10 clause 23C, and some charitable institutions and charitable and religious trusts are also covered. The only idea is that the way you get yourself registered, because these exemptions only get you can claim when you are being approved as such. Okay. So now income, I cannot open a PM care fund because that is one and only PM cares fund. So that is only for that. But now I'm talking about the educational institution. Now educational institutions, there are three types of educational institutions which are covered under section 10 clause 23C. One is my 3AB. Students, please try listening and connecting, because again I'm saying you this will help you understanding charitable trust wala part also, because there is again the same thing. Okay, so if I'm an educational institution or any university which is again existing solely for the purpose of education, not for the purpose of profit, and I am wholly or substantially financed by the government, then all my income would be exempt. I am again not a normal commercial coaching center. I'm a well-established university or an educational institution, and my sole purpose is providing education and not providing profit. And I'm substantially financed by the government. What is substantially financed? When more than 50% of the grants or the incomes which are received from the government, then I am substantially financed by them. Wholly, so you all understand. Okay? But if I'm not financed by the government, but I am an educational institution and I exist only for the purpose of education and I do not have profit motive, and my aggregate annual receipts are less than 1 crore. My aggregate annual receipts are less than 1 crore, then under section 10 clause 23C sub clause 3AD, my income would be exempt fully. I'm an education institution. Now I'm an education institution not financed by government but have annual receipts more than 1 crore. What will I do? What will I do? Now I am an education institution. I want to do welfare for the society. I do not have any profit motive, but government is not financing me, and obviously my receipts are more than 1 crore. Then what will I do? In that case, I have one approach to get myself approved under subclause 6 by giving an application to the CIT exemptions, Commissioner of Income Tax exemption, that I'm so and so institution. These are my records and I am solely for education purpose. Kindly exempt all my income. Kindly exempt all my income. I am doing good for the society. Please exempt my income. So if they give me approval, then under clause 6, my exemption would be applicable. My income would be exempt. Clear? Good, Sandeep. I'm glad you people know the full forms. Okay. Next, we come to income of hospitals. Again, we are in 1023C only. I told you one is that national funds which are covered here, all that. Then there is education institution, 3 categories: government financed, less than 1 crore income, and if you get yourself approved or authorized by the CIT, correct? But again, the purpose here is not to earn profit, but to provide the purpose for which you are established, which is providing education. Similarly, for hospital, it works in the same line, that you are a hospital which is wholly for philanthropic purpose, not for earning profit. You want to save lives, you want to do good, you do not want to earn something out of it, and you're in hospital wholly financed or substantially financed by the government, exempt. You're in hospital less than 1 crore receipts, exempt. You are in hospital having wholly philanthropic purpose, and by Commissioner of Income Tax exemption, you have been approved, so your income would be exempt under respectively clause 3AC, 3AE, and 6A. Subclause 3AE, 3AC, 3AE, and 6A. Clear? Then 10 clause 23C में again there is clause 4 and clause 5. इसमें भी to claim the exemption you need to get yourself approved, as in you have to have an approval of the Commissioner of Income Tax Exemption. You will apply them that we are so and so charitable institution or we are so and so charitable trust. They will give you the approval, and then only your income would be exempt. Why will they give you the approval? When they see that you are not earning any profits, your aim is to do good for the society, to provide wholly for the purposes for which you are being set up, then only they will give you the exemptions. Clear? Next are your mutual funds. Mutual funds, you get income from mutual funds, right? Now you are making a contribution. Have you ever thought mutual fund ka income, how it is taxed? In the hands of mutual fund, so any income of mutual fund is exempt from tax, number one, if it's a mutual fund set up by SEBI. If it's a mutual fund set up by SEBI. But if it's a mutual fund set up by any public sector bank or public financial institutions, like your Kotak Mahindra Mutual Fund or your HDFC Mutual Fund, their income would only be exempt when the conditions which are notified by the central government are fulfilled. When the conditions which are notified by the central government are fulfilled. Okay. So HDFC Bank would be a wrong example because we are talking about public sector banks. So example of SBI, your SBI Mutual Fund, all of these would come into this. Okay. Clear? Any doubts, students? Do not get worried seeing the content in the slide. All of these content are same. Investor Protection Fund. Section 10, we are doing these three sections, these three clause A, 10 clause 23 EC and 10 clause 23 ED. Anyone has any doubt regarding anything? Sivraj, which institution you're talking about? The education institution? If you're talking about the education institutions and the hospitals, which are registered under section 10 clause 23C, then their entire income till the time they are working for that purpose would be exempt. Just in case their income, their status is withdrawn, then their income would be taxable. What would be the income for such hospital if it is not for profit? You would be receiving so many. See, obviously to run, how will you have to pay salaries? You have to purchase materials. You get grants. You get grants from the government. So those grants are your receipts, right? So those receipts are not taxable because you are for philanthropic purpose. Clear, Muthu? Okay, Suman has a question, ma'am. What if the income exceeds 1 crore? Fully taxable or only amount above 1 crore will be taxable for universities and education institutions? Good question. See, for universities and education institutions or hospitals, these there are three types of 1023C. One is when you're financed by the government, then all your income would be exempt provided you are for the not-profit purpose. Another is automatically under section 1023C, second category, your income would be exempt if you are an education institution or an hospital, as the case may be, and your annual receipts are less than 1 crore. And your annual receipts are less than 1 crore. Okay, so automatically the entire income would be exempt. But if your annual receipts are more than 1 crore and you're not financed by the government, then to make your income exempt, you have to dedicate yourself for the sole purpose, not for any profit purpose. By not for any profit purpose, we mean obviously you will have profit by matching income and expenses. We mean that you are not utilizing that profit for distribution of the trustees and members. Okay? then only you will get this approval by the Commissioner of Income Tax Exemption, and then your whole income would be exempt. But again, students, the process is not that simple that you have received the certificate. Now just sit and relax. Every year audit has to be done, report goes, all of these things, lot of scrutiny happens, and any such any tip which is against you, your approval may be withdrawn. For a private hospital, again, private hospitals will, if they are not registered as an hospital under section 10 clause 23C, then their income would be taxable. So if you want to make it exempt, then you have to be, because private hospital, again I'm telling you, by profit we mean that obviously you will make some profit, but by profit we mean that not distributing the profit to the members, to the owners, to the trustees, using it again for the purpose of the object itself is called not for profit purpose. Okay, so private hospitals do not do so, but if they have to get it, then they have to leave the profit element. They cannot distribute it to their trustees or their members, and then and show that we are only for the sole purpose of philanthropy, and then they can claim the exemption. But yes, I cannot automatically claim. I have to have this certificate of CIT exemption saying that your exemption has been granted. Now your income would not be taxable, but the limit is 1 crore is only to make your income exempt, is that you will be in hospital or in education falling in that category, not that 1 crore tak income would be exempt. 1 crore tak, if you have annual receipts in the previous year, then your income would be exempt entirely. This is a criteria to give you the exemption, not the income is exempt to that amount. Okay, Sumit? Sure. Great. Shall we go ahead? Okay, so now I was talking about my section 10, clause 23 EA, EC, and ED. Investor Protection Fund. Now, you know, been regularizing so many things now. Okay, so now back to the topic. Investor Protection Fund has to be set up by each stock exchange. So, recognized stock exchange, commodity stock exchange, or commodity exchanges, and even the depository. Who are the depository? The DMAT ones, NSDL and CSDL. Okay, I have to set up an IPF. Okay, so these IPF ka income, what would be the income? The members of the stock exchange will make contributions. Depository ke, okay. So these investor protection fund which are set up by recognized stock exchange or commodity exchanges or depositories, their contribution would be exempt. Their contribution would be exempt, provided they should not distribute any part as profit to its member, as profits to its member. Okay, so clear? So this is the whole thing is simple. The investment protection fund which has been set up by these respective categories of persons have to, the protection fund ka income would be exempt. Next is my specified income of coal settlement guarantee fund set up by recognized clearing corporation. Now hota kya hai? This is all the theory which you can read, but I'll explain you. To to ensure smooth trading. To ensure smooth trading, a core SGF is mandatory as per your securities contract regulation 2012. Okay, a settlement guarantee fund has to be done so that any settlement default which may be technical, which may be ironical, which may be just intentional also, malicious also, but to protect the other party, so that there is no default in settlement, core SGF is formed. A core settlement guarantee fund is formed. Who are the members? Everyone from the stock exchanges. This information you will not get. Better you should listen. Clearing corporations and your depositories. All of these are the members of this core SGF, and again they make contribution to such fund. So इस fund का income is exempt under section 10 clause 23 EE. Clear? So now if you will read the theory, you will connect it in a much better way. Core settlement guarantee fund का income क्या होगा? The contribution which they have received from specified persons, any penalty amount which they receive, any income from the investment this fund has done from the accumulated balance they have, all of these income would be exempt. Next, simple. Is my income of trade unions, not any trade union, registered trade unions ka income is exempt if it is income of other sources or income from house property. Okay, their income is exempt. Similarly, provident funds, superannuation fund, gratuity funds, I'm talking about the funds. These funds receive contribution. The contribution are the income of these funds that is exempt. That is exempt under section 10 clause 25. Okay, what would be the incomes which are exempt? Like interest on securities, because obviously funds, provident funds and all of these work on what? The contribution which you make, they invest it in government securities and then they get interest out of it, and that is the basis on which the returns are defined. Or something is received from trustee or some deposit link plan, all of these are their income. Then employee state insurance fund, ESI. Have you heard of it? Yes, I think articleship में, ठीक है? So ESI is also a fund. ESI fund को contribution मिलता है from all of us. They receive the contribution from all of us. ठीक है? So, and how do they use the contribution? To cover medical and accidental claims, insurances of the members involved. ठीक है? So their income is also exempt. Then simple. Sorry. Scheduled tribe. If you're a member of a certain scheduled tribe which is residing in the area which is here, Manipur, Tripura, Arunachal Pradesh, Mizoram, Ladakh region, वहाँ पे everyone has their own scheduled tribe. If you're a member of that scheduled tribe, then your income from any source, please listen carefully, income from any source in that particular state, whether that's house property income, capital gain income, other sources income. So if I am a member of a scheduled tribe of Manipur, any income I am having from any source in Manipur would be exempt. Also, any income which is in the form of dividend or interest on securities from any source at any part of India would also be exempt. Okay, so one is from that state ka whatever I'm earning. Another is interest and dividend. So if I'm a member of scheduled tribe, this would be exempt. This is under section 10 clause 26. Section 10 clause 26 AAA ka question sometimes come, which is for Sikkimese individuals. Sikkimese individuals who are, Mr. Gaitonde, born and brought up in the state of Sikkim, had a net profit of 2,25,000 from a business located in Sikkim, and interest of rupees 55,000 on the securities issued by government of Rajasthan. So what would be the status? The whole income would be exempt under section 10 clause 26 AAA. Why? Because a Sikkimese individual having any income from source in Sikkim is exempt, or any interest or dividend income from anywhere is also exempt. Clear? Anyone has any doubt up till now? But we are coming closely now to your section 10AA. See, Aman, it is not it is not easy to have such exemption certificate and just say, again, I'm saying that you get a certificate and you claim the income as exempt under section 10 clause 23 C. That's not such an easy way. You have to show there are lots of paperwork involved and later on lots of chartered accountant report goes. So it's not easy or a cakewalk to claim the exemptions. Okay. Shall we? Now let's move forward. Next, again, something in relation to minority scheduled caste scheduled tribes. 10 cross 26 AB is for Agriculture Produce Marketing Committee Board. Every APMCs होते हैं. These committees का whatever income they get is exempt. Similarly, if there's any corporation or body or institution which is established for promoting the interest of the scheduled caste, their income is also exempt under section 10 clause 26B. Any corporation for promoting the interest of minority caste which is set up by central or state government, their income is also exempt under section 10 clause 26BB. You can read it here because I don't want you to I just want you to have an idea of what the section says. Okay? Section 10 clause 26 triple B, income of corporation established for ex-servicemen. Who are ex-servicemen? Who are the one who are you can say who had served in military or naval or aerial services and now they are retired. So these are your ex-servicemen. So if any statutory corporation is established for the welfare of these ex-servicemen, provided they are citizen of India, then the income of such corporation would be exempt. If any cooperative society is formed for promoting interest of SC/STs, their income would be exempt under section 10 clause 27, provided their members are ST/SCs and the finances are provided by the government. It again, students, see all these sections or exemptions which we are reading, somewhere or the other way you will have their connection in the chapters, like research association will come in PGBP, like your provident fund you will read in your salaries income. So to connect it better, you should have an idea of whose income we are talking about, and obviously the incomes. Why would tax authorities will give you an exemption when you're doing something good for a particular part of a society, right? So all these exemptions, if you've seen what we're discussing, have an underlying benefit is to either promote welfare or promote a minority group, or if you are into some charitable or society welfare what you say work, then to give you that exemptions. So these are not like chalo, let's set up an ESI fund and I will get an exemption. These are not that such. There is only one ESI fund authority, there's only one IRDA, their incomes are being discussed. Okay? So please do not have that any one of us can go and form a society for promoting scheduled caste, scheduled tribes, do our shows and we'll get the exemptions. No, there's a proper procedures. You have to be registered, you have to be financed by the government, you have to be either come into act by any state or provincial act, then only such exemptions are given. Okay. Then tea, coffee, rubber board, section 10 clause 29A, all of these have boards which provide subsidies and look into your matters like your coffee board, rubber board, tea board, tobacco board, marine products export development authorities. All of these are your main associations, you can say. So their income is also exempt. Okay. Now under clause 1029A. Now section 10 clause 30. Section 10 clause 30 and section 10 clause 31 talks about subsidy, but 1030 is specifically for tea board and 10 clause 31 is for other subsidies. Other subsidies, like if you're into growing manufacturing of rubber, coffee, cardamom, or specified commodity. Government gives you subsidies. That subsidy has to be treated as income. But if it's a tea subsidy, you will get it as an exemption under section 10 clause 30. Who gets the subsidy? The person who is engaged in the growing and manufacturing of such tea, and in other cases of such rubber, such cardamom, such specified commodity. But you will only get the exemptions when you are using that subsidy for better replantation, better rejuvenation. ठीक है? Similarly, administrator income from units from the administrator for specified undertaking or a specified mutual fund, which we discussed in clause 1023D, income is exempt under clause 1035. This may not be in your module from this year onwards. Okay. Then 10 clause 39, specified income from international sporting event in India. Now, if some international sporting event happens in India, say Commonwealth Games, and if the central government notifies that, so whatever income is happening from that sporting event would be exempt. Okay? Then 10 clause 40, grants received by specified subsidiary company. There are, I'll tell you what, I'll just read it. Income of any subsidiary company by way of grant or otherwise received from its Indian holding company, which is engaged in the business of generation, transmission, distribution of power. Now, what happens, students? Sorry. What happens? A holding company is giving it to its subsidiary company any grant who is into the transmission of power. Only that grant would be exempt under section 10 clause 40, but that is only for settlement of some that grant is given for settlement of some dues in connection with reconstruction or revival or of an existing business of a power generation. Okay, last almost, yeah. Specified income of certain non-profit body, any non-profit body authority notified by the central government which is appointed under a multilateral treaty, agreement or convention to which central government is a signatory. Multilateral treaty means some non-profit body was established as a result of a treaty. That body ka income, specified income would be exempt. Again, not important. So up till now, this is again a very important section, section 10 clause 44. Now again, to get all your people attention, if I say that anyhow you have to remember these sections, beginning from what we did for a quick revision, 10 clause 2 should be remember, 2A, 11A, so Kanya Samriddhi, scholarship again you should remember, payment to MPs, MLAs you should remember, local authorities you should remember, research association ka you can remember, then exempt your section 10 clause 23C, again very important. 1023D is important, mutual fund. These sections you have to remember anyhow. Sikkimese individuals pay, very rare a question comes, so you can remember that section. Then is this, my very important section, NPS trust. Because this will, you will see it under 1150, but it is not there anymore. You will see it under your TDS also. Can I have everyone's attention, please? Okay, so now let's do section 10 clause 44. Now NPS trust, how many of you have an idea what is an NPS trust? Sorry guys, sorry. One second, guys. Okay. Now, income received by any NPS, a national NPS, National Pension Schemes Trust. Okay. Now, what happens, student? You will get this section often again and again, but let me give you an idea of what this section is. Now, this is a Atal Pension Yojana, basically. NPS trust is formed, okay, in which people make contributions. Central government employees have to mandate to make contribution. The employer has to mandate to make a contribution, okay, and then after attaining certain age, you get one lump sum amount, and here the contribution are attracted as exemption under section 80 CCD subsection 1, 1B, 1D and 2, which you will study in your deduction chapter. Okay. Now we're talking about this NPS trust. Whatever their income they have received, would be exempt. But not only that, 10 clause 44 itself says they are exempt from the applicability. You can remove this because dividend distribution tax is not there anymore. Okay, they are exempt from the applicability of securities transaction tax. So that means if an NPS trust from the contribution which they have received deals in any securities, okay, they do not have to pay STT. STT is mandatory if you are trading on a stock exchange, so they do not have 112A or 11A. Then they will receive all income without deduction of TDS. Whether this is the specific exemption or specific status which have been given to them. Any doubts? Okay, so this is an important one. Then exemption of specified income of notified debt, please, because this is the amendment, a new clause which has been introduced, section 10 clause 48C. Certain incomes of Indian Strategic Petroleum Reserves Limited, section 10 clause 48C. I'll read it and I'll discuss it then. Okay? Any income accruing or arising to Indian Strategic Petroleum Reserves Limited. So it is only for one person who is an Indian, basically an ISPRL, being wholly owned subsidiary of Oil Industry Development Board under the Ministry of Petroleum and Natural Gas as a result of arrangement for replenishment of crude oil stored in storage facility in pursuance of direction of the central government would be exempt. However, exemption would not be available in respect of an arrangement if the crude oil is not on the storage facility for the first time. Now, there is this, if you will see the name very clearly, Indian Strategic Petroleum Facility, and hence whatever is getting from that would be ISRL. But if the crude oil is not represented, then the income would not be exempt. This is a new section which came. Again, students, these are just the should remember in all cases. Okay. So before we move to section 10AA, if you have any doubt, you can please ask. I'll take a minute pause, please. Aman Tobacco Board. Okay. Now we move to a very important section which comes. Please, this is section 10 ka part. Suppose this is 1023A, but this section 10AA is altogether a different section. This is not section 10 clause AA or anything like that. Please I've seen people making a mistake, so it may not be a mistake for you, but please be attentive. Okay. Now we move to a new section, which is section 10AA. Now this is a deduction which is basically given from the gross total income. Section 10AA. This is a tax holiday for units which are located in special economic zone. Now, special economic zones are the zones which are notified by the government. Here the trading policies are much more liberal, and there are again multiple zones, like you have IFSCs, you have for your foreign trade zones. All of these zones are basically to promote global relations. Okay, so now SEZ is a special economic zone. The entrepreneur under 2005 who registers as an entrepreneur under the SEZ Act 2005 would be an eligible SSE to claim deduction under section 10AA. To claim deduction under section 10AA. What is the deduction? The deduction is of export profit. The deduction is of export profit. What are we talking about the export profit? Export profit can be the profit which is coming from export of any article or thing or provision of services. That means section 10AA gives exemption to units who are into manufacturing of articles or things or into provision of services, and that to these are exported, and only the export profit ka you get the tax holiday. Only the export profit ka you get the tax holiday. Okay. So again, section 10AA gives the exemption to whom? To the entrepreneur who are listed in who are registered as an entrepreneur under the SEZ Act. They should have a manufacturing unit in an SEZ zone, which is a special economic zone. Their profit from the export of manufacturing or things of any articles or things or provision of services will be exempt. Okay. Along with that, there are certain conditions. Is that they should commence the operation, that is, commence the manufacture or production of articles anytime between assessment year 2006-7. They had to begin their production. So then only you will get the deduction. Now, section 10AA may, one thing has changed, please, through an ordinance. They have said that this was a crucial time and then everyone went into lockdown, right? So they have said that if before, please listen carefully, if before 31st March 2020, you have been approved, you have been given the approval to begin the production, okay, but due to events you could not begin the production, because the criteria is the production should be begin within this time period, but you could not start the production, and you started the production only after 31st March 2020, only after 31st March 2020. But yes, you were given the approval before 31st March 2020, then it would be said that you have started within, it would be deemed that you have started your manufacturing within this timeline, and you will be eligible for deduction. You will be eligible for deduction. What did I say? That this is an amendment or by an ordinance, that if in case you have been approved by 31st March 2020, but you could not start the manufacturing by 31st March 2020, then because of that approval, it would be said that your production has been deemed to begin within this time. They have not extended the timelines, but they have put a clause that if you have received the approval, but just the production did not begin, the manufacturing did not begin, it would be deemed that it has begun. Clear? So again, the condition is that you should be the entrepreneur, you should be into manufacturing of articles or things, and then export profit will only be exempt. Production should begin from so and so time. Another thing, to claim the deduction, Audit report is mandatory. Audit report is mandatory. And audit report का timeline is now for previous year 2021 is 30th September 21. Okay, so you have to furnish the audit report. Earlier audit report and your return used to be filed simultaneously, but now audit report has to go at least 1 month before. The timelines are like this: the 1 month before you can still also file simultaneously, but the timeline for audit report is 30 September 2021, and the timeline for filing the return is 31st October 2021. Okay. Any doubt, guys? Sure. So, sab kuch I have told you. I have told you what are the conditions. I have told you what would be exempt. I told you export profit would be exempt. But how much is the deduction? Because this I told is a tax holiday. And when I say deduction, this you will get from the gross total income. Please, PGBP may do not reduce it. Okay? Please do it in the gross total income. Not be formed by splitting, reconstruction of business in existence. It should not be a transfer of business. You should use only new plant and machinery. Second-hand plant and machinery should not be taken, but a plant and machinery which is used outside India is not considered as second-hand. But if you're using second-hand plant and machinery, it should not be more than 20% of your total plant and machinery. Okay. Now the deduction period. You get the deduction of 15 years, but it is subject to, suppose you begin your production say on 15th October 2006. Deduction you allowed as deduction 100% of export profits. Okay, then so from 7/8 to you can say 2011-12. Okay, then for the next 5 years, that is from 12/13 to 16/17. 50% of the export profits would be exempt. 50% of the export profits would be exempt. 50% of the export profits would be. Next part. Again, 50%. Any doubt up till now, guys? Zone reinvestment reserve account. Total turnover can be from my domestic sales and export sales. Okay. So total turnover, then I will have obviously my export turnover. I will have my export turnover. This much so I know. So the profit of the unit which is located in SEZ, so total unit ka profit, total profit, I want simple unitary method into export turnover upon my total turnover. Any doubt? This is how I will calculate the export profit. Now in this turnover at your level, you have to remember is that your turnover will not include any freight, any telecommunication charges, any insurance amount which has been received, or any expenses which have been done in foreign exchanges. All of them will not be included either in your export turnover or your total turnover. Okay, so it's just a unitary method of calculating export profit. Export turnover upon my total turnover into my total profit. Simple. Okay, so this is how you will calculate. Don't worry, we'll be doing the question, but a few things which you have to remember in this is that this is for the unit which is located in special economic zone. This is not for the units which are there in your foreign trade zone or your EPZ export processing zone. But having said that, if the foreign trade zone is converted into a special economic zone, what did I say? The trade zone itself has been converted into a special economic zone, then any unit which is located there for the remaining period, they will get the benefit. Okay. Obviously, it may not happen that you have only profits, you may have losses. That losses can be carried forwarded and set off. Capital loss, business loss, all of them. If you are claiming deduction under section 10AA, you cannot claim the deduction under section 35AD or under section 7, your 80IA or 80IBs. Okay? If amalgamation or merger happens, suppose I am a SEZ unit, okay? Today I begin my production. I start claiming the amalgamating company will not get the deduction. The amalgamated company will get the deduction. And for the other part, they will carry it for the deduction. Now you will say, ma'am, isn't the rule says that you should not be formed split up section or a business in existence? That is for formation. Once you've started claiming the deduction, then you may get amalgamated or demerged into. Now everyone, I please request to try solving the question which is on your screen. 30, export turnover of unit A 50, total turnover of unit B located in domestic tariff area DTA, that is not a special economic zone, guys, to under section 10AA. अच्छा, production date is not given, production begin. Good, Aman, very good. 15 is the correct answer. Simple, guys. You don't have to see your domestic tariff area information. You just have to pick your by 100. There is no deduction under section 10AA. You will write it specifically for unit B. Clear? Section 10AA, which you students should remember, is for computer software. A case study may come for your computer software. Now, computer software में students क्या होता है? It is given, it is a clear stand. We said that export of your goods, articles, okay, and services, provision of services is also covered here. So now, if you a computer software, if you have to go and prepare the computer software at a site which is located outside India, it would be said that this is a export of the good, and it would be covered for deduction under section 10AA. Yes, provided you are a unit of SEZ. Okay. Secondly, if any technical manpower is employed there for development of the computer software and you're having income from that, that will also be said that it is an income from section 10AA. Third, students, slum sale mein question comes that in slum sale whether 10AA can be applied. Yes, you can say again, it is a case specific thing. Amalgamation is different, slum sale is different. A case specific thing, and you have to see that no two assessees should be claiming the deduction for the same year. Okay, so all of these conditions you have to keep in mind to do section 10AA. It's a very simple, sweet, small section, but just few things has to be taken care of. Okay, now last part of the day, and again I'll request in the meanwhile time and before going also, please give your questions. Again, just in case if you want to revisit, you can please send it in the query part. The students, it's a stand and it's a very common understanding that if your income is exempt, your loss cannot be claimed as deduction or as a benefit under the Income Tax Act. Simple. An income exempt, then the loss cannot also be taken. Okay. Now, if I talk about my section, which is my section 14A, this gives a restriction on allowability of expenditure. This gives a restriction on allowability of expenditure. I'll tell you why this section came. Now, this section came, student, because people who were having huge exempt income were not showing that income, obviously not showing the sense means were not getting taxable, but at the same time they were putting expenditure in relation to that income in their P&L accounts, which as per law should not be there. If your income is expend, the expenditure should also not be there in the P&L accounts. So section 14A came which said that if there is any expenditure in your P&L account or you have claimed any expenditure in relation to earning of exempt income, that expenditure would be disallowed. That expenditure would be disallowed. Clearly would be disallowed. Okay, so you should, as an auditor, you should be very careful that any expenditure which is there in relation to any income which is not getting taxable, you should quickly disallow it. Okay, now, but what used to happen now, assessing officer ke paas when the cases came, they did not have any significant guidelines that how should we disallow it. Maybe I have taken a loan, a part of it is used for earning exempt income, the other part of it is being actually used for the business purpose. How should we calculate such disallowances? So for them, Rule 8D came into picture that any assessing officer, if they have to make a disallowance under section 14A, they have to take the help of Rule 8D. In addition to the directly related expenditure, they can make a disallowance up to 1% of the annual average of the monthly averages of the value of investment yielding exempt income. Because if I'm having exempt income, obviously some investment must be standing in my books of accounts, correct? So annual average lena hai of the monthly average. What do you mean by annual average of the monthly average? Every month ka opening and closing का average, then 12 months सबका opening and closing का average, monthly average would come, then उन सबका total annual average which is divided by 12 का 1% would be my disallowance. So directly related expenditure and 1% of the annual average of the monthly averages of the investment yielding exempt income, exempt income would be calculated and this would come in my total disallowance. But if anyhow the SSE proves that my total expenditure is much less than this, then total expenditure. Aman, I believe some of no issues. Aman, I believe some of your question may not be you did not get it because of the technical glitch. You can ask it again. Any doubts? Okay. So then see you in the next class, students. Have a good night, stay safe, and please, whatever you do, do it with all your heart. Thank you so much.